nearly 3,000 business titans, politicians, heads of state. They're all gathering from all over the globe.
This week, you're in for special episodes of Squawk Pod from the World Economic Forum in the Swiss Alps. First up, an interview with Ray Dalio. The founder of Bridgewater, one of the world's largest hedge funds, is out with a new book, and it's all about debt.
Our problem isn't the deficit, our problem is the politics.
It's an economics lesson with Ray Dalio, a famed hedge funder.
Now, it's not so much the guide of inflation, it's the supply and the demand of debt. That will be the driver.
Where he stands on our newest era of tech innovation.
The applications of AI are under-discounted, I think.
Plus, how the world is receiving the inauguration of Donald J. Trump for his second term, and the shift Dalio sees in geopolitics.
We are going from a world order in which there were multinational organizations, multilateral, to an environment that is more unilateral. In other words, America first and more confrontational.
I'm CNBC producer Cameron Costa. Squawk Pod reports Bridgewater founder Ray Dalio begins right now. It's that time of year again. For the 55th year, world leaders convene in the Swiss alpine village of Davos for the World Economic Forum.
I don't know about there, but it's pretty cold here.
Not as cold here, Becky.
Every year, leaders from countries and industries around the world convene. Ukraine President Vladimir Zelensky is there, China's second-in-command Li Qiang, CEOs like Microsoft's Satya Nadella, JP Morgan's Jamie Dimon, Goldman Sachs's David Solomon, Morgan Stanley's Ted Pick, Coca-Cola's James Quincy, and many others. You might even hear some of those voices on this podcast throughout this week. They're all coming together under this year's Davos theme, Collaboration for the Intelligent Age. Now, it's worth noting who isn't there. Donald Trump, busy with his first days as POTUS, again, UK PM Keir Starmer, French President Emmanuel Macron, Indian PM Narendra Modi, all passed on this year's event. On our end, Joe Kernan and Becky Quick will hold down the fort stateside, covering the first week of President Trump's second term. Andrew Ross Sorkin will be on the ground in the Alps, although the inauguration is still top of mind around the world.
Here at the World Economic Forum, you can't go anywhere without anybody talking about what happened yesterday and what it all means for the next 4 years.
So how was the inauguration received, both in Washington, where Becky is, and abroad with Andrew?
Yesterday, President Trump's inauguration speech closely watched here. I should say, by the way, Becky, with some trepidation from those who are from outside of the United States. The more
That's
American CEOs that I spoke with last night, I would put in a combination of hopeful with a little bit of anxiety and skittishness, all talking about, let's hope for the best and we have to, plan for the worst. What will the worst be? There's all sorts of questions about what that red line might be. I think if you're outside the United States, there is, I dare I say, almost a palpable fear to some degree about what it's going to mean. I think the tariff piece of it is part of it. I also think that there's, I actually sat next to somebody yesterday at dinner from outside the United States who made a fascinating comment who said, we love the United States being the leader of the world. It's different if America has to be the winner, because for America to be the winner, that means there has to be losers. It was a very sort of interesting articulation at the table of what the issues are in terms of how folks outside the U.S. are looking at this whole situation. But I know we'll be talking a lot more about it throughout the next 3 days here. We're going to get a lot of perspective on all of it.
Yeah, Andrew, there's a huge number of people who were leaving last night or this morning on their way from here straight over to Davos. I think you're right to point out that the perspective from outside the United States may be sharply different from the perspective here in Washington, D.C., particularly the mood and the atmosphere that's just been here for the last several days. We had Albert Bourla yesterday, and one of the points he made is that there's going to be radical change. And I think that idea of radical change is one that lots of people are trying to adjust to. His perspective was that there is more potential upside than downside, but everyone that you talk to is trying to figure out what that change is going to be and trying to figure out how to adjust to that, because that is the one thing that is certain, is there is going to be some massive change that comes, and that's the stated intent of Donald Trump. He wants to change things. He wants to shake things up. Even reading today in the Wall Street Journal about how he may have the GSA, which is the government's landlord, basically sell off 2/3 of their portfolio of real estate that they hold. And so if you think of that in one small area, one sector, that kind of change being dropped across the entire universe, there's a lot of adjustment and certainly some uncomfortable feelings that people, particularly in power today, may have with that, as you have to figure out where the winds are blowing, how that's going to shake out, and what that means.
A good person to help us explore what it all means, our first guest in our podcast series from Davos, Ray Dalio. He's the founder of one of the world's largest hedge funds, Bridgewater. And he's way more than a hedge funder. He's long been an investor and a traveler in China. He even attended a dinner with Presidents Biden and Xi a couple of years ago. You may have even read Dalio's best-selling book, Principles. It's a sort of management manual at Bridgewater, but it's for anyone. Life lessons in radical transparency. Now, Dalio's written something new and timely. It's about debt. The U.S. national debt is currently over $36 trillion, and it is now a huge concern on Wall Street and on both sides of the aisle in Washington. Dalio sat down with Andrew Ross Sorkin on the Squawk Box set at the World Economic Forum, between the many on and off the record meetings and dinners and panels with other leaders. Here's Andrew kicking off their conversation.
Bridgewater founder Ray Dalio. He's got a new book. I don't know if it's a book or really an essay or a treatise.
It's a thing.
Really. And it's called How Countries Go Broke, Principles for Navigating the Big Debt Cycle. And it is going to be available online soon.
It's
not
available.
Already. It's available now.
Yeah, I'm putting it out part by part. It's got 4 parts, and then in about 2 weeks it'll be all out, and it's free on a PDF because people don't know the mechanics, and government officials don't know the mechanics, and so this went back for 35 countries. What is the mechanics? What is too much debt? How does it work? How does it end? So I wanted to convey that because it's the most important political issue that's going to be in front of us.
Let's break it down, because it is very true. We are going to have taxes on the table this year in the United States, and we are going to have deficits on the table, and they're interconnected. How the deficits get dealt with is the fundamental question. You've been studying this stuff for a very, very long time.
Yes. And it's not just an American issue. It's a Chinese issue. It's a European issue. It's a Japanese issue. There is a supply-demand issue, and there's mechanics of that. I hope we can touch on those mechanics, but there is a path forward, and whether you take that path forward or not is going to be critical for the bond market.
But let's talk about it. And what is that path? And you're right. I've been arguing, I don't know if you agree, that the bond market, more than anything else, is going to be the governor on all of. If there is a governor on the politics of our moment right now, given that you have a red, Congress, Senate, and the White House, the only governor, if you will, politically, in a weird way, may be the bond market.
Of course, because interest rates, the government interest rate is the backbone of all markets, right? Stock market, bond market, all borrowing, all lending, everything, right? So in answer to your question of what is the solution or what needs to be done, and it's almost a black and white situation, is think of the number 3%.
3%.
3% of GDP.
Yes.
We have a projected deficit of 7.5% of GDP. That means all those bonds have to be sold. And then because of the supply-demand imbalance, when you sell bonds, when I calculate who are the buyers of the bonds, there will not be enough buyers. And then what could be worse in this dynamic is those who own bonds also sell the bonds. And when that happens, there's a tremendous supply-demand, and then we have problems. We can get into what it looks like. It's happened many times before. So we have to stabilize that, and we can do it. That's what I call the 3% solution.
Okay.
3% solution is that you can cut it down from 7.5% to 3%. Now, what people don't realize is there are three ways of doing that. They understand that there are taxes,
Yep.
there is spending,
Yep.
okay? But what happens is, like in 1991 to 1997, there was a comparable decrease in the budget deficit, because if you do it when the economy is good, you will get a lower interest rate. And the lower interest rate means less money on, less cost of the debt, because we have so much debt that the interest cost on the debt is more important than spending and taxes. And so you can get there. And if you get there, you'll get a bond market rally.
How do you get there?
3%
But
of
how do
GDP.
you get there? Because there's going to be a big question come this summer about whether you extend the tax cuts as they are, whether you make them even lower. Does that help on the growth side? Will you ever make it up on the other side? How do the tariffs relate to all of this?
You know, the biggest problem, I think, is that everybody has their particular way.
Okay.
So I think it's first of all the members of Congress, all the president should basically say 3% of GDP. Now, because they have all their particular ways.
But then it's how do you get there?
Okay. First, if you make the pledge. Second, if you can't agree, you would start off, you'd say, I'll do everything proportionately. By way of example, if you did everything as your backup, then you work from there. If you can deliver any form. So yes, if you can deliver cost cuts, but you have to pledge to deliver those cost cuts. Now, there's smart ways and there are stupid ways, okay, of doing that. But and everybody will argue over that. But you must achieve the three. So I think the 3% pledge, 3%, we will do 3%. If we can't even agree on how we do it proportionately, but let's work together on trying to do it. Because our problem isn't the deficit. Our problem is the politics, the fragmented politics.
Let me ask you a separate question, which is a Wall Street Journal article that was talking about P ratios at the beginning of effectively a presidential campaign, not a campaign, but a term, and just how high they are now, at historic highs, even relative to where they were before Reagan, before everybody. If we are here together a year or two from now, do you look and say these markets, these equity markets, are going to be higher than they are today? They're going to be lower than they are? Do you look at this as a great investing environment, given the backdrop of deregulation and all of the things that the president is saying he plans to do? Or do you say, wow, we've gone pretty far already?
We have gone pretty far already, and particularly in certain sectors and so on. But the biggest influence is going to be what I'm talking about. Because if you have those multiples and you have a rise in interest rates, okay, you will have a pop. So as we focus on that deficit question, but yes, of course, it's fragmented. I think that it's, of course, led by the sectors that are great sectors, the disruptors, the AI and so on. I don't think it's been carried down to the applications of AI. In other words, the uses of AI. So if you're watching, as I'm watching around the world, and by the way, it's very interesting, what's going on in China with AI in terms of applications, other places. The applications of AI are under-discounted, I think. And then, of course, what is the multiple? The multiple is an extension of the interest rate.
But that means you would be long this market right now?
No, I have to be diversified. I don't want any particular right now. I don't want to be overextended on an alpha. And also, I would say one thing is, I don't think we think enough about what's alternative money. We only think everybody's. Okay, so when you think about
give me some alternatives to what's alternative money right now.
Okay, gold is an alternative money. Yeah, and it's a very effective diversifier. So if we're dealing with some Bitcoin, debt is money. In other words, when you're owning debt, you're owning a promise to get money. And when you own money, essentially you're holding it in debt.
You've held
And I think that is our biggest risk.
Our biggest risk?
That's our biggest risk. The money part of the risk. There are great things that are going on in innovation and change, but people don't pay enough attention to the interest rate, the PE, but also the cost of it. People have a tendency to think a great company is a great investment without looking at the price.
I remember when you sat here with us this is years ago now, and you said cash is trash. Do you remember that?
Yes, because cash was trash.
Cash was trash.
Yeah.
Is cash trash now?
Cash is about right. They shouldn't ease it. Any monetary policy from here?
They should not. You
No,
think Jay
and
Powell,
then what will happen?
Okay.
Now it's not so much the guide of inflation, it's the supply and the demand of debt. Okay, that will be the driver, because what happens is as you have a supply-demand problem,
Right.
if you do, and you will, then you have to, what does the government do about that? If they don't fill that supply-demand, if they don't provide the buying, then interest rates go up.
Right.
Okay, and that has a bad effect on everything. So that is really, I think that's the topic of today. That's the topic of the next 6 months.
Bitcoin.
Yeah.
You have been a holder for quite a while now. I don't know how big a portion of your
Little,
like 1%, kind of little.
Yeah, little like that.
You've done more than well with it. What do you think happens now?
I think the important thing is, what is your alternative money? And do you have an alternative money? Not a lot. I have, by the way, and I won't talk about myself, but I think an investor, if you look, you will reduce the risk of your portfolio if you have 10 to 12 or 15% in gold, because it has a negative correlation.
That's in gold, but would you do
I'm
more in Bitcoin?
Or let's call it anti-money.
Okay, but would you do 10% in Bitcoin today at $104,000 a Bitcoin?
No. And again, what I do is another thing. But for me personally, Bitcoin is not a central bank reserve. Right. It's not going to be bought by alternative governments right now.
It might with the strategic Bitcoin reserve if that happens.
But unlikely only because it's so easy to control and follow. Mm-hmm. You know, it's not like. But I'm not saying yes or no.
Okay.
You know, I'm just saying think about the value of debt and money.
Right. Think
about the value of debt and money. When debt is money, because throughout history, there's always the interest rate that you get that's the temptation. And is it enough to deal with that supply-demand problem?
Let me ask you a different question. You have long been, I don't know if I could describe you as a China hand, but somebody who has relationships in China. I think you understand the dynamics
since 1984,
between these two countries. How do you think things are going to change over the next 4 years as the relationship between the U.S. and China? Obviously, TikTok is now a chess piece, but perhaps in some of this debate. What do you think it looks like?
I think that we are going from a world order in which there were multinational organizations, multilateral, to an environment that is more unilateral. In other words, America first and more confrontational, more fighting. And that there was a demonstration of fighting and power. So we had wars. Right. We had a war in the Middle East, and we had a war with China in its form, and so on. I think that hurt people, had some hurting. And I think maybe it's enough to demonstrate power. We're now in a world in which might is right, and there's a power. And now I think there's a cautiousness. So I'm hopeful, but it's right at the brink. Right. I'm hopeful that we will have a contained, safe. Now that doesn't mean we're going to get along. In both cases, and in all cases, there's always the risk that the other will do harm. It's in history, you know. It's the.
Is there a bigger chance that Trump's in office that China says we want to work with you and there's some kind of transaction to be done, or is there less of a chance because they're worried about him and they say, you know what, we're going for Taiwan now? How does your?
I don't think there's any going for Taiwan now. I think China has its problems. We have our problems. And both countries will benefit if there's not worse problems. You know, it's good if we don't have a war. Right. It's good if we take care of our debt problems. It's, you know, there are these 5 major forces that I look at. And I just want to say that one, and I'll say it quickly. There's the debt money force. Yep. You have to understand that in the economy and markets. There's the internal conflict force. There is a war going on internally.
Internally inside the United States.
And in many countries.
Right.
And that's a war between the left and the right, and what it would be magna and woke, and so social values and so on. There's a war to win, okay? Quickly, because we're going to have in 2 years we're going to have midterm elections.
We are.
Okay, and so on. Number three is the great geopolitical war, the change of the world order. That's done. Number four, acts of nature, droughts, floods, and pandemics have killed more people than wars, and we're watching it. Wow, it's amazing. LA on fire. And then number five is technology, and this technology change is more impactful than anything, and how they work together. So this is. It's a moment. I'm focusing today on the next thing that's going to be up. And so it's free. Read it. Understand
how countries go broke, folks. Ray Dalio, thank you.
Thank you for listening to this special Squawk Pod Reports. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin every weekday morning for 3 full hours. Of course, you can always find the highlights right here if you follow Squawk Pod. Have a great day.